Hey traders, Mike Sir here. Welcome back to my channel where I profile the top traders in the world and teach you how to replicate their incredible success. In my videos, I always talk about trading consistency being one of the keys to trading success. Now, you can't be successful by making a lot of money on one trade only to get back all your profits on the next one, or having one profitable month, then an unprofitable month afterwards. Besides not having much trading success, this messes up your mental game and causes you to doubt your abilities as a trader. Now, most of the top traders whom I profiled have achieved consistent trading success, and in fact, I will profile another top performing trader who has achieved an average annual compounded return of over 298% for the past 9 years. An incredible top and consistent performance. The trader I'm referring to is Daljit Dhaliwal. So in this video, I'm going to share his trading strategy with you and teach you what are the rules behind his extraordinary track record. So let's get started. When Daljit was young, he loved playing tennis and had dreams of becoming a professional tennis player. In fact, he only started playing tennis at the age of 10, but quickly rose up the ranks to become ranked number 80 in the UK by his mid-teens. However, due to an injury and the realization that becoming a tennis professional didn't excite him anymore, he turned his passion to the stock market with the same level of commitment that he had for tennis. Now, even though Daljit devoted himself to learning everything that he could about the stock market and trading currencies, he didn't have a lot of initial trading success. However, one thing that I've seen a lot of successful traders have is persistence. Now, when Daljit was committed to a goal, he does whatever it takes to achieve it, and in the end, he achieved the goal of becoming a successful trader. His 10 plus years of trading career performance has been phenomenal. Now, besides never having an unprofitable year, he has averaged a compounded return of over 298% each year. Now, due to these high returns, you might be thinking that he plays a very high risk, high reward type of trading style, but this is not the case as he controls and minimizes risk with maximum drawdowns of only 20%. One of the key reasons for his trading success is his profitability. He has been profitable 95% of the time on a quarterly basis and 70% profitable on a monthly basis. A truly impressive and consistent trading performance. What I've been most impressed about Daljit's performance is his combination of achieving incredibly high returns without taking big downside risks to his portfolio. Before I explain Daljit's trading style and strategy with you, I want to let you all know that this video is sponsored by YOUHODLER. They are a fintech platform that is focused on crypto-backed lending with fiat currency, crypto, and stablecoin loans for private individuals. Now, they are a Swiss company that is providing a bridge between the conventional financial system and the new digital economy. In addition to lending services, they offer a savings account that can earn you up to 12.3% per year. As well, they have a one-click exchange where you can convert your fiat currency into cryptocurrency. All your crypto assets will be protected by the Ledger Vault's industry-leading security. Most importantly, YOUHODLER has an excellent reputation in the industry with 4-star reviews on Trustpilot. If you want to sign up for an account with YOUHODLER, please click on the link in the description box below. Okay, back to the video. When Daljit first started trading, he was primarily what we call a technical trader, meaning that he would rely on the charts and trade price breakouts and utilize technical indicators to help him identify potential entry prices. However, he just didn't understand nor had the confidence why technical analysis would always work. Therefore, he soon evolved into relying more on fundamental catalysts, meaning that he would study the stock price movements and how they will react to market-moving fundamental events such as the US Federal Reserve meeting announcements and the European Central Bank meetings where they discuss the economy and interest rate policies. So his strategy was prior to fundamental news events, he would have his own personal opinion of how the market would react to the headline news event based on his research. Then once the news was out, he would day trade the news based on whether they were positive or negative relative to the market's expectations. Now, sometimes he didn't understand the reasons behind the price movements, but all he cared about was that there was an immediate market reaction to the news, and he would let the market tell him how to trade. Now, during the Euro crisis in 2011, Daljit had a lot of success with this type of headline news trading strategy because it was during the turbulent times in Greece when there were headline news every single day. Now, whenever there were comments released by the European officials that were either positive or negative towards Greece, Daljit would trade the initial price movement for short-term gains in the euro currency. However, nowadays, due to algorithms, this strategy doesn't work anymore, and he would now focus on fading the initial price reaction, meaning that he would trade against the initial price trend. In addition, as he started realizing that the majority of his profitable trades were based on a fundamental analysis focus rather than purely on the technical charts or day trading, he became a longer-term macro event-driven trader. This meant that macroeconomic analysis became the primary driver of his trades. He utilized leading economic indicators such as the GDP, or considered gross domestic product, and historical analog models that he developed to get a big picture view of the US and European economy. Then he used a short-term strategy of trading headline news as a tactical tool for getting position in the market. Also, he will use his understanding of specific fundamental catalysts that may be driving the market. Before I share with you the 8 trading rules that Daljit lives by, please smash that like button and hit subscribe if you haven't already. Okay, Daljit's rule number 1 is to wait for the perfect trade. Now, when he was playing tennis, he had to hit every ball that came to him or he would lose the point to his opponent. However, in trading, he doesn't feel it's necessary to trade every opportunity that comes his way. He will wait for the perfect trade that meets all of his criteria and trades that he feels most confident in. As well, Daljit knows that whenever he's not in the right frame of mind or the market is not acting in sync with the way that he trades, then he doesn't take any trades. Now, this type of thinking helped Daljit avoid a lot of potential trading losses that would have been detrimental to his trading account. Daljit's rule number 2 is based on the 80-20 rule, meaning 80% of his profits would typically come from 20% of his total trades. Now, you've probably heard me mention this theory in numerous past videos, and when Daljit analyzed his past trading history, he realized that most of his trades came from just a few ideal trades that he made. Now, once he discovered this, he stopped focusing on day trading fundamental news catalysts and started to look for longer-term price trends. When these macro trades were working, they turned out to be his biggest winners. Daljit's rule number 3 is to play big. Now, many top traders whom I profile that have hit a home run type of trade in the millions or billions trade aggressively by taking on large positions when they have a high conviction level on a trade that they probably made money in the past or is considered the perfect trade to them. Now, Daljit is no exception because he doesn't trade often and he waits for his perfect trade setup. Whenever he does trade, he plays a big position. Rule number 4 is don't sweat the missed trades. Now, there will be many times in your trading career that you've hesitated a bit and missed out on an opportunity that would have made you a lot of money. Now, the market will always provide a constant stream of opportunities if you look around, and don't be too concerned about the opportunities that you weren't prepared for in the first place. As Daljit puts it, as long as the sun rises tomorrow, there will be another day I can make money. It is not something I have to worry about. Rule number 5 is to look for drawdown alerts. Now, managing risk is an important skill that Daljit focuses on, and he has noticed 3 things that always happen at the start of every drawdown that he has experienced. The first thing is he experiences a significant loss of unrealized profits on his trade. Now, it could be a trade that was working very well in his favor and then suddenly reversed course. Now, this is a warning sign for him. The second thing is whenever he experiences a 2% or greater loss in a single day, he uses the 2% threshold as a guide that his trades will probably not work in his favor and that he should consider bailing on his trades. The last thing is when a big size trade doesn't work out according to his plan. Now, as I mentioned, when Daljit trades, he usually trades big on his high conviction trades, and when a big trade of his doesn't make money right away, then there is something wrong. Rule number 6 is he always has a backup plan, and he's prepared for what could go wrong in his trading. So for example, if a trade that he's just entered does the opposite of what he thought would occur, then he would immediately exit that trade with a small loss, or he would just take the opposite position. Daljit's rule number 7 is to take partial profits as trades move in his favor. Now, he realized that whenever he earned big profits on his trades, he kept locking in his profits rather than hold onto a big full-size position, only to see the market suddenly reverse and his profits disappear. Due to his profit-taking strategy, this is one of the reasons why Daljit has been consistently profitable. The last rule is Daljit believes that trading is like a sport. There are lots of psychological similarities between excelling in a sport and also in trading. Both require you to be disciplined while you're playing. Both need you to manage your rest and nutrition, or you won't be able to perform at your best. And lastly, both require you to make optimal decisions at any given moment. Thanks for watching. If you like this video about Daljit Dhaliwal, you can click on the left to watch other videos where I profile the top traders in the world, or click on the right to watch the full playlist. I'll see you guys in the next video.